Hello, everyone. Mike and Corey here today. We had some big announcements yesterday at the Ankerstar Wealth Happy Hour. I know Steve talked about expansion into the family wealth model, covered that, and the video went out, as well as some of our exciting partnership with Autopilot. So today we're going to talk about three key topics. I'm going to talk about some news that looks like maybe we're not going into too bad a recession, and I'll cover why I think that. And then Corey's going to talk about Google, Apple, and then here's the key. What month is typically a peak month, or what month is typically not a peak month for the S&P 500? Because so far this year, it has only been February.
Mike, yeah, do you have a prediction what month the S&P peaks the most?
Oh, you're right, because I have no idea. Well, I want to say December because it's the end of the year. And we get a
I'm
Christmas
not going to reveal
rally.
yet. You're going to have to wait.
Don't reveal yet, but I'll put my guess as December because it's the end of the year and there's Santa rallies. So I'll go with that. So let me give our disclaimer. This is a financial education presentation. You must do your own due diligence on anything you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and Corey's alone. So I saw a couple things today that would indicate to me that if we are in a two-quarter recession, if the economy is slowing to more negative GDP, it won't stay that way long. And the first one is the price of oil. And you may say that's kind of crazy. Like, why is that? Why is the price of oil going up? And this is, why is it going up a good sign? So if you have a gas vehicle and the price of oil is going up, that means your cost of gas is going up. And I remember thinking, why would that be good news? The reason it's good news is it's a supply and demand that creates the price. And if there's demand for oil, that means things are being built, things are being moved, people are driving, airplanes are flying. These are all good signs for an economy growing. So when oil goes down a lot, and I'll go back, this right now I'm showing a 3-month chart, but what you can see is over the last month and a half, oil prices are starting to go up. So this would be a good sign that the economy is doing better. I'm going to go back and look at a 5-year chart, and you can kind of see how what this looks like. So back in the COVID times, look how low the price of oil was. And you're probably saying, well, I remember COVID, but I don't remember cheap gas. But you had it. So, and then when things continued to pump up, you see it keep on going up over $100 a barrel, and then boom, down. So, Corey, what do you think about that? What do you think about oil prices? And
I don't think they're going a lot lower. I think the energy demands that are going to be all around the earth with AI and other innovations are going to push energy prices higher.
Right. So you don't think all the electric vehicles will just reduce the demand for oil?
Well, solar panels are as cheap as they have ever been. I don't know if you've seen that. So there are alternatives, but I don't think it's going to completely insulate crude's price over much lower from where it is now. Get it while it's hot.
Get it while it's hot. Buy that gas.
Go fill up that tank today. Just kidding.
I used to be that guy that when my tank was empty and I saw the oil prices drop, I'm like, I'm going to run down and fill it up while the prices are low. So another sign is, and this is Boeing, and I know I've taken a hard stance on Boeing in the past, and I'll be the first to say Joel had a very positive aspect on Boeing, and it's come true. Boeing is doing much better. And I'll show you their stock price that reflects it. But here's the thing. They've had their biggest set of orders since late 2023. Now, some of the reasons their orders dropped were quality and issues with that. But here's the thing. You don't buy airplanes unless you think people are going to travel or that you need them. And so this is a great sign that in the immediate future, people are going to travel more, and companies are planning on it. So here, I'm gonna show the Boeing stock, and of course, I'm gonna say, wow, I wish I would have bought it a year ago. Here's a 1-year graph of Boeing, or not even a year ago. I wish I'd have just bought it 3 months ago. But look at Boeing at a 52-week high. So this is another good sign. So, anyways, that's what I've got, Corey. I'll turn it over to you, and we'll go high tech.
All right. All right. Well, I'm not going to keep you waiting long. We'll get right into your prediction here to see what happens. So the month that is most likely to come with a peak for the S&P that year is December. 53% of the time, the S&P 500 peaks in December. How often does the S&P 500 peak in February? 2% of the time. So
once in the last 55 years.
Yeah.
55, 45. Once in the last 45 years. So if it peaked this February, if it doesn't get any higher than February, it'll be a once in 45-year event, right?
Yeah.
If we don't celebrate.
Yeah. So are we taking out those highs? It looks like it. We're probably set up for something in the fall. We've seen volatility happen in the fall before, and it could happen again. So anyway, I just thought this was interesting. I guess I'll finish this statement by saying my expectation is that we will be setting new highs sometime relatively soon. I do expect some sideways type action beyond that to an extent, maybe headed into a rally in the fall. We'll see, but definitely do not expect the highs from February to hold. So anyway, interesting chart. If the February highs did hold, the one time that happened where the S&P 500 peaked in February, you returned 1% that year. So, after two 20% years, if it played out the exact same, Mike, and we got just 1%, there's worse things out there than that, right?
Yep.
All right. I did mention yesterday that I would hit on Apple's developer conference from yesterday. There were quite a few announcements and features announced. The AI integrations, though, did underwhelm many of the audience members, and the stock's been kind of flat in response to this. One cool thing, which I'm actually very excited about, is this liquid glass announcement. So they're sort of giving the first big user interface upgrade since I want to say maybe like 2015 or 2016 or something. So your screen is going to be much more interactive and bouncy, and it's going to have it's going to feel much more responsive than it currently does now. Along with that, you'll have a lot more flexibility with how you build your layout, and one of those options comes with clear tiles. So you'll be able to set all your tiles in this sort of transparent gray type of tile, where if you have a background, let's say a picture of your family or something on your home screen, it won't really disrupt that picture very much, but your tiles will just sort of gently overlay on top of that, which is pretty cool. I'm excited to try that, Mike. But unfortunately, that's sort of where the excitement ends. What users want is an iPhone that becomes like a partner or a teammate for you. They want to be able to say, hey, iPhone, call my doctor and schedule an appointment for next week. Or, hey, iPhone, book me a flight. I'm going out to California tomorrow with Steve. Book me a flight real quick. Or, hey, iPhone, tell my accountant that I'll send those papers over, whatever, send this email for me. People want their iPhone to be an actual agent for them. And Apple, through Siri, through any developments they've had, they haven't given people really any use cases that make it feel like the iPhone can just do real work for you. So until that comes, people might be disappointed there. But when it does come, it's probably going to feel like a whole new world. What do you think, Mike?
Well, I mean, it is very interesting because you said your iPhone would be more like a partner, and I think nowadays I see a lot of people, myself included, too much on their phone, and I almost wonder how much of a partner, how close do I really want to be to my phone? And it kind of gave me flashbacks to my previous girlfriend, or my previous phone, my Motorola Razor. Remember the old Razor, Corey? You don't even know it. It closed
Oh
up.
yeah, I know. Trust me, I know. I wasn't cool enough to have one.
I didn't sit and stare at that one like I stare at this one. So I don't know. I'm kind of mixed of my emotions. I don't know if I want to be on my phone any more than I am now. But
Well,
and
no,
here's the
it
thing.
might save you some time.
I,
You say, hey,
there's a trust thing too. I mean, I'm gonna be honest. If I just went to my phone, hey, book me a flight that to I've always been, I want to look at my flight options. I want to pick my seats. I want to pick my airlines. I want to know where my connections are. I don't know if I'm ready to trust this phone to do that. Um, maybe it's just it's an age thing. Maybe I got to grow into it.
well, I think that's where it's going, and I think that's what Apple has underwhelmed on so far. But I totally understand, Mike, especially involving money. People are going to have some hesitancy around that. But it seems inevitable in some fashion that your phone is going to want to do some of that. Okay, one other interesting note from today: OpenAI taps Google in unprecedented cloud deal despite AI rivalry. So, of course, Google offers Gemini and OpenAI offers ChatGPT, two of the kind of, I guess we'll say leading LLMs. ChatGPT has a big head start there if you're thinking of it as a race. But ChatGPT needs more cloud space and cloud access, right, for their growing demand for their product. So OpenAI plans to add Alphabet's Google Cloud service to meet its growing needs for computing capacity. Three sources told Reuters. So this is this is good for Google because Google's currently in third place in the cloud race. So you've got Amazon's the biggest. Microsoft is growing the fastest, relatively speaking. And then you've got Google in third place. It's profitable. It's growing quickly, but they don't really have a certain claim to fame anywhere. So to win a big client like ChatGPT or OpenAI is pretty amazing, and it shows that Google's obviously a viable option in this space. We already know they're a viable option, but any big deals that get announced are reinforcing of that. So anyway, Google's stock reacted positively to this, and they trade at a very cheap valuation, so they could seek significant appreciation from here.
I like it. And Google's in our models. Microsoft, which owns a piece of OpenAI when it eventually IPOs, is in our models. So I love seeing it. And Apple is too. So I want to see all three of those do really well. Awesome. Well, thank you all for hopping on. Now you can all go back to the Apple conference, the Software Developers Conference, right? That's what we hope.
Yeah, look up Liquid Glass. It's going to be, I'm excited.
So Corey, when you said that, it gave me like a science flashback. I'm pretty sure, and somebody can correct us if it's wrong, the glass is actually a liquid already. Have you heard that? Is that true?
Whoa, nope. No, I haven't heard that.
I know, and I don't want to Google it on the fly because who knows what comes up when you search liquid glass or whatever. But anyways, I'm pretty sure that glass is considered a liquid. I know it breaks and it shatters, but it's a slow-moving liquid.
When I took chemistry in high school, Mike, our teacher quit the second day and the school never hired anyone else. That's a true story. So we had a sub, and so I mean, what?
It's the shortage
behind in chemistry.
The shortage of chemistry majors in the Austin area. Corey's teacher quit. Did you say the second day?
The second day. He did. I don't think he knew what he was getting into or something, and and the school just never replaced him. So
somehow I feel like the schools have let you down, Corey. Okay, Corey will research whether glass is actually a liquid, and he will report out on that in later shows. Thank you all.
All right.
Have a good one. Bye.